Stuff. Okay, so really quickly, what happened when we walked into the market today? There was a key thing that I wanted us to be aware of, and it was the rising wedge resistance level. And again, what those other resistance line means is it gives potential credence to certain zones, because as technical analysis continues, what you try to do is you try to find every level of support or resistance as you're trying to read these stocks, because those are usually the zones where you find the best risk reward. So we were talking about that earlier on, the move to 65.33. Me, I was stubborn this morning. For me, I was looking for the test and break of 65.33, and I was ready to tack on all my short positions, and then the market never was able to hit that level. Again, 65.33 is a vague outlook. That level could have been 65.31. I draw these things by hand, and I do my own, technical analysis and breakdown. But again, rising wedge resistance, orange line, 65.33, that really critical level that you needed to watch on the triple Qs here today. And what happened next? We pulled back. And overall on the picture right here, when you take a look at the triple Qs, we talked about the zenith point. So using this rising wedge right here, if you could find the rising wedge, again, it's a very deep breakdown for me of the chart. It's something very important to me. And when you look at the triple Qs right here, you have to tell yourself, if we're hitting resistance like that today, and let's say we don't come up and retest day highs today, and we're still able to, test and potentially break 65.33, that would give less or the least credence towards that rising wedge pattern as we try to determine what kind of technical pattern the Qs are in. Keep in mind that the zenith is usually where the ultimate resolution does come by. So for me in the triple Qs, we're halfway in the wedge. We might need another month and a half of this action within this wedge before we hit that zenith point. Of course, we could break up or down, but for me, big trade that was missed today was 65.31 on the triple Qs. Again, we're just going right back to that analysis we had earlier, that rising wedge resistance, that first key level to watch, the orange line, 65.33 as we banged against it. Look what happened last time when we banged against 65.33. You could just see right there the previous green bar. This was obviously done overnight, and today the Qs jumped up to that resistance line. But if you look at this green bar right over there, just right over there on your screen to the left, and what you see has happened is it hits the rising wedge resistance and falls down to support. A fall down to support here would represent almost a $2 drop in the triple Qs from this level. You do have a lot of names acting bullishly. Great call out on that Vernet X. Great job in chat putting in a nice little breakout candle here, but just keep in mind of one thing. I mean, you have 3.2 million shares. Unless the volume can really start approaching 5 million, which it could easily do on a day like today, for me, this bear flag pattern is still going to be in effect. We broke this ascending channel support. We caught the breakdown here. We were bearish for the break. I said, look for a key test of 23.11. Stock got way past my key test of 23.11, hit 21.25, and now is bouncing up, now up 20% for the day. Over at daily resistance right here, $30.26. Definitely that level that you need to keep on your radar here today if you're watching a stock like that. Triple Qs, pretty disappointed. Raise your hand if you're able to catch a short up there and you're using that first level. I wasn't able to do it. But if you were able to catch some short plays, small, that's great. That's exactly what you should be looking for in terms of risk reward. A short up near where the Qs are trading near day highs, and you give it a little bit of room, and you're able to catch a move all the way down to day lows. So definitely a solid catch there. I was a little more stubborn. I was hoping the Qs would hit 65.33 because that would just probably have a huge impact on my day. You took a look at Apple trying to approach 600, couldn't do it, pulled right back down, just hit around 593 on that pullback before digesting there a little. Apple still very strong name here for the day, continuing to show that divergence from the triple Qs, as you do have the Qs negative while Apple is up $11. So huge divergences, very hard market for people to read. You just need to be at the right place at the right time. Cena was a nice little look here for me earlier on. Just taking a real quick look at this 1 minute chart, I noticed the volume percolation. And that's when we started having that break up there in Cena. The pullback right here, we saw the double bottom at 48.35. This was right around 10.30. Enter a long position, very tight risk reward. Volume starts picking up, and you get the bull flag continuation pattern from 10.32 to 10.40. That beautiful explosion, and I was able to capitalize nicely on that play here today. Also, research in motion, what a disappointment. I was looking at it on the daily. I had a huge position. Took $540 loss on the calls, took a $980 win on the shares, and for me, I just saw that 750 level unable to hold, as I thought it would have difficulty pushing below, and it did have difficulty pushing below. You exploded right up in the morning, you started to digest, you tried to break 750, you couldn't do it, and when you were finally ready to do it, that's when you really just saw this research in motion come in. It didn't do technically what I wanted, so I just covered those, I just got rid of those calls and took off the shares as well. So it was a little bit of a weird play there for me. Right now, if what I'm looking for in research in motion at the moment is I'm looking for a pull down here to potentially test $7 again, which is Friday's low in the name. So you have a lot of mixed baggage across the board right now. For me, I do still believe the easier trade in the market for most traders is going to be when you're outside of this rising wedge. Because keep in mind, right now the rising wedge is starting to get closer and closer to the zenith point every day, as every wedge does. And as it does that, what it does is it tightens the parameters of where the up and down sides are for the triple Qs or the spiders, if you're watching that as well. And what happens is you're starting to get a constricted range where you keep bouncing, blipping through, bouncing, blipping through, and bouncing, but still relatively staying within that very tight range. So that's basically it here for today. I was watching on Thursday for this Thursday to come out where, you know, what this bold action that the central banks might be doing. And there's a lot of interesting stories and whatnot, but we're going to have to wait for Thursday to see how the central banks are going to act, especially after all this Spain and Greece news has finally just digested a little. So it's going to be a very interesting day. International news could spike the markets in either direction. Be prepared for that, people.